of February 2024. It's nice to have your company, especially some nice fresh faces in the room. Welcome to you all. I hope you get something out of the show. And if you wish to contribute at any stage, please feel free to do so. You can come in via chat. You can raise your hand. You can share your screen. You can talk to us. You can do whatever you like. Show's pretty much all about sharing and sharing one and all. We don't discriminate between who wants to share. It's very much a case of your show. And if you want to share something with us, or if you want to ask us a question, that's also very, very fine. Okay, let's get stuck in, shall we? And look at what I'm looking at. I'll go a little bit slower for those of you who are new to the show, because just a little bit strange, I suppose, what goes on here at times. But we start always with gold versus the US dollar. And the reason that we do that is because there historically is a nice little breakout pattern that happens around about London Open time. And doesn't happen all the time, of course, but what we try and capture is that breakout when London session begins. So here's how it works. I use the 1 hour chart, 1 hour on gold versus the US dollar. And we're looking for the range that begins with the Asia session, which is the second candle of the day on the hourly chart, which is this one here. We then mark the high of that session closing at the end of this session. In other words, Asia session open to London session open, including both candles. At this point, the high of that range is the high of this bar here. The low of that range is the low of this bar here, just barely. So we'll mark that and see where we finish up, or where the candle finishes up in about 2 minutes from now. The high will also mark. And what we attempt to do is see if we want to, but if it's the levels that we're currently sitting at when London opens, whether we're willing to take the trade or not. In other words, whether the reward to risk is worth entering the trade. The trade would be going short underneath the bottom of the range with a stop loss above the range, and at the same time placing a long order at the high or above the high of the range with our stop loss below the low of the range. So pretty simple. And if one triggers, the other one cancels. Now, I don't trade them all the time. I add filters to this, and the filters include not trading into heavy or strong, solid support or resistance without getting the profit in the bank. In fact, we're using the pivots at the moment as targets, and you can see the daily pivot and the weekly pivot and the monthly pivot, mind you, exactly together. That signifies one thing to me, and that means that the market is ranging. I'm not going to trade into those pivots without profit in the bank. And if I were to take profit before I hit those pivots, with a risk of remembering that we enter here and our stop loss is here, so we've got $13.30 as a risk to win $1.40. Does that make sense to anybody? Didn't think so. So I won't be taking that for sure. The short's not as bad, but we're still running into a pivot here in DS1, and there is a support level here that you should be able to see, which has been both resistance, and support through here as well. So I think we're landlocked here, guys. I don't think this is a good breakout trade at all, because we're trading here, only hoping to get there, or hoping to get here, sorry. But the limit, really, the first stop appears to be here. So I'm not taking the trade, and that's often the case on a Monday. But if you follow this throughout the week, I think you'll find that it's a pretty good system to use. Don't know how it worked last week. Let's have a look. Last Friday, that looks good, but whether it worked or not, I don't know. So here's the high of the range. No, it doesn't look good anymore. Here's the low of the range. So you would have been taken in here and out with the NFP announcement. So might have looked good, but it wasn't good. In terms of Thursday, here's the low, or is that, where's the 9 o'clock bar? That's the 10 o'clock bar. So that's the low of the range right there. The high of the range is the 9 o'clock bar, which was that one. Sorry, the high would be there. So you would have been taken into the short and you would have got the money there, no problem at all. You would have gone to DS2. G'day, Paul P. No problem. So that would have hit target. On Wednesday, 9 o'clock bar is the one that we're interested in, which is there. So the low of the range is here, high of the range is here. You would have got it absolutely wonderfully well there. Beautiful. On Tuesday, high of the range, 9 o'clock would have been there. So the high of the range is here, low of the range is here. Where did I say the high was? There. Okay, so you would have been taken into the long and you would have smashed it again. So Tuesday, Wednesday, Thursday would have been good. Monday, low of the range there, high of the range there. So you would have been taken into the high, you wouldn't have been taken out, and that also would have been a winner. Monday worked, despite me not taking the trade, but there you go. So last week would have been really good for that breakout trade, which is very, very simple if you want to know more about that. But I think I've explained it just as well as I can. Today, I have a bearish outlook on gold, not so much because it's gold, actually not gold per se, but gold versus the US dollar. I have a bearish outlook. The only thing that's stopping me from trading this short at the moment is this resistance area that we have in front of us, where we've got a support trade line, we've got a resistance trade line, and we're heading straight into that level. There's probably a little bit of support there as well in terms of, let me just bring that down, in terms of horizontal level. So you can see it's been support through here, support here, support here, support here. Will it be support again? I have no idea. But to risk that at this very point in time is probably not where I want to be. What I want to do is trade the weekly bar, but the same applies. The weekly bar looks fantastic to me. I love those bars. Coming off, I'll just go a little bit wider so you can see the extreme of this range. Kind of. You can see this range has been in place since 2020. And we've had 3 perfect triple tops sitting there. Or, sorry, 1 perfect triple top. 3 perfect ones would be 9, correct? And we've rejected that level for the 4th time, the 5th time, the 6th time, and now we've got a lower high sitting here in the making. And that's the crux. It's in the making. It's not there yet. So do I want to trade this short on the back of that bar? Yes, I do. But that level there has got me a little bit, how's your father? If I then have a look at the dollar index, which should give me an indicator as to where this is going short term, I see this range here, which has come off the bottom, has been very, very strong ever since. We gapped up a little bit this morning on the daily chart, but we've broken clear of this resistance area here. Problem is we've got another one dead ahead. I'm expecting a little bit of a pullback on the dollar this week. Not so much this week, but in the first day, maybe a couple of days of the week, I'm expecting a little bit of pullback on the dollar. Doesn't look like it at the moment, in that we have gapped up and there's a little bit of space above us to hit the top of that channel. But I do expect that we will have some pullback. Maybe it's not today, maybe it's not Tuesday. I'm not sure what numbers are coming up through the week that will affect the dollar. I think there's some manufacturing numbers. I'm just not sure about that. Ash will fill us in on that very, very shortly. So I'm not sure what drives this back down. NFP number drove the market up, obviously. I'm not sure what's going to drive it back down, but a retest of the pivots here and the backside of that trade line would be absolutely what the doctor ordered here for me, which would in turn force this price up a little bit, which is where I'd like it to be, so I can get clear of that support zone and get my money in the bank before I hit that So a little bit of a pullback here on gold would be really, really handy. If it smashes through this level, then I'd be looking for a retest, and then I'd be more than willing to jump into the shorts, that's for sure. So that's where I see gold at the moment, based really on the US dollar, and the US dollar looks to be going strength to strength, as I say. Okay, updates for those of you who follow my trading. We got into a few trades last week. We missed this one because it didn't get entered. We traded this bar here short. Didn't happen. We're still ranging on euro versus the CAD. Maybe I can have a look at that on the smaller time frames. Maybe there's an opportunity to trade that off the top and the bottom of that range. Kiwi versus the CAD. We were triggered short on Kiwi versus the CAD. Did we trade them on the daily, or did we trade them on the weekly? I traded on the daily. Okay, so we're playing a break of this candle pattern here. Slingshot candle pattern, as it turns out. Got taken into the trade early in the week, and then it retraced dramatically off the same bar that took us in. And on Friday, we had a nice re-entry into the positive zone. Now we're going to retest that trade line. That's pretty much to be expected, that retest. So not concerned about that. The pivots are there as well. In fact, if this closes like this tomorrow, I may well add some more onto this trade just after my first take profit, because I think this is setting up now as a potential ABC going short. And I think the direction is quite acceptable. So Kiwi CAD I'm still interested in and still holding. We missed Euro CAD because it didn't trigger. Kiwi Swissy I'm still in. Been in that forever and a day, it seems, and now it has come to that level which I thought was the line in the sand. I thought if we got through that, we're probably in a little bit of a pickle, but whilst we're ever on top of it, I still think we've got a chance to collect the cash on this one. Kiwi versus the Swissy, similar to all the currency pairs versus the Swissy. We just wait and wait and wait and wait and wait for the Swissy to get weaker, yet it doesn't. Crazy stuff. One day it will, and I think, you know, in the scheme of things, we appear to be in currency land, approaching or have approached and are trying to get through not just resistance levels and support levels, but historic resistance levels in some cases and historic support levels in some cases. So now's the time that we really need to be cognizant of that and be ready if we are going to reverse in the wonderful world of reversion to the mean stuff in currency land, that we should be able to take advantage of that. This is one of those, but there are quite a few at the moment. Hopefully we can take advantage of that. Look, there's a whole bunch of game changer bars this week. I won't go through them all because there's way too many. I thought the ones that were interesting were Euro Yen, number one. Euro Yen, not so much because I like the euro. It's just that the despised currency known as the Japanese yen continues to disappoint. And we've had pardon me, a breakout of the most recent highs a few weeks back, come back off that dramatically. But as is the theme with the yen, it doesn't last too long, and the euro is outpacing the yen again. The reason I like this is it is a weekly game changer bar suggesting that we buy. Not against that in any way, shape or form. It's come back to retest that former resistance level. I expect that to be support. I expect the high to be tested, and I think you can get some profit in the bank before you hit that recent high. So I expect price to go to at least to here. So I don't think that's the worst game changer on the planet at all. It certainly fits with the description, which is, or the necessaries, which is what's ruling this market. At the moment, I think what's ruling this market is probably, it's not so good on euro yen. It's much better on Aussie yen. There's an inverted head and shoulders here. It is their kind of thing. It's a little bit disjointed, but that's what's ruling the market at the moment. So I think long is the correct direction. Don't like trading at those elevated levels, but I think there's room to take some profit before you hit those highs. So euro yen, I think, is interesting. The other one I think that's interesting is dollar versus the Swissy. I know I keep banging on about the Swissy and it has to change, but if you look at the dollar Swissy chart, that's not the one I want. That's the one I want. If you look at the dollar Swissy chart, it looks very much to be a couple of things to me. The only thing that's missing here is a reversal signal. I don't see a double bottom. I don't see a bullish engulfing bar. I don't see a morning star. I don't see an inverted head and shoulders. So that's the issue that I have. It's potentially going to reverse, and it has come off the bottom of the short-term descending channel. Do I see, and I'd love to see, a clear reversal here pattern, and I do. It's known as a tweezer bottom. Since then, we've had a higher high, a higher low, a higher high, a higher low. So we're in search of the next higher high. We've got a bullish engulfing bar on the daily and a key reversal bar on the daily, also known as a game changer bar. So this one I think is really interesting. I'm not going to take it on face value. I'm going to wait for that level to break, maybe come back and retest it. And then I think there's a buy on dollar versus the Swissy. Remembering that I think the dollar is going to be strong this week after a little pullback. I don't see that not being the case. So this would make sense to me as well. Problem is, I'm already exposed to the Swissy with the Kiwi. Maybe I need to swap hands. Maybe that's the idea. So that's where I'm going early in the week. As I say, there's a lot of game changer bars. I think they're the best two. Pound Swissy is also interesting. Did I have that chart? And the reason Pound Swissy is interesting, it just looks absolutely like a clear game changer. I shouldn't use that because that's a bar, right? It looks like a clear false break of this level. If I had a Jeff Bible, if you like, of trading breakouts and break-ins, this would be on my Bible list or in my Bible, because it's a break of the support level. It's clear consolidation underneath. It's a strong re-entry back into the area, and it's a retest of that area with a game changer bar to boot. Almost, it's not quite because it hasn't closed in the top third, but I find this really interesting. Difficult to trade because you're trading straight into resistance again in that trade line and also the horizontal level. So if you did trade it, you'd have to put your entry probably here, but your stop loss has got to go down here somewhere. You can't just trust that candle, I don't believe. So I'm going to have to wait, similar to what I said before, let it break, come back and retest the area, which is very strong. And then I think we've got a trade on our hands. Still waiting for the Swissy, Ash. How you going?
We are still waiting for this. Yeah, we are indeed waiting for the Swissy. But I'll tell you what, mate, if you go back to that dollar Swiss,
Yes.
this is where I think it becomes quite interesting. We'll talk about the pound in a minute as well. But with the dollar Swiss, there's a on the daily chart, you can see it better. Longer term trend line that runs from.
Hang on, I'll open up the chart. It might be a lot
cool.
easier to see.
Yeah, I mean, I'm really bearish on the Swissy.
When's it going to happen?
Well, I mean, I think it's one of those things that it may, yeah. So if you draw the trend line from the top of that previous view that you just had, even minimize that even more.
Wider.
Yeah, go wider. Yeah, from there. That's where it's starting to look interesting to me, because if that breaks through, and actually it's a bit of a channel as well. You could probably duplicate that line and put it in, put another one down below, because it's starting to look like a channel then, and yeah, probably even wider than that. Yeah, right down to that where you got your arrow now. You might get a channel in. Yeah, somewhere around there. I mean, it's possible. It's possible that it's that wide, and if it is that wide, the measured move just takes it right the way back to the what looks like the October kind of levels.
Use something like that.
Yeah, I'd say so. I'd say so. Yeah, kind of gets us. Yeah, gets us back to those October. That October test, and it's a long way to run. You know, I'll show you sort of like where I'm at with this as well, because you
Sure.
know, as you know, last week I took a trade in this one, and I've got absolutely no intention of getting out of the trade. It's on the CAD Swiss. I've just put my stops really low. And the reason I put my stops really low is that I knew that it was going to be a relatively volatile week, if I'd put my stops under these levels, I would have just about got taken out. So there's no point. I suppose you know it's getting to the point where I can put them under here, but I'm just going to wait for the if it breaks. Inverted head and shoulders is really starting to mature now. It does suggest maybe a few more days before this fully forms, but but it's looking like it's holding. And that's really the first port of call. You know, need it to hold first. There's a decent kind of level coming down through here. Had the false break before and it's false break back again. Now we're back above that line, so it's looking good. And we could maybe have to we're going to have to put that a little bit further out as well, probably to that particular level. So it needs to break through there. But if it does break through there, then that's the time really to kind of add to the position. And then shove some stops a little bit tighter, in my opinion, because it's going to look a little bit more. The evidence is going to really start to stack up. But I'm happy to hold on to it and see what happens. And I'd be the same with the dollar Swiss as well. I think what you're saying now with the dollar Swiss is the way I would look at it as well, where now because of where we are along this line, it's got to break that before the trade becomes anywhere near attractive. And we could probably use this. Bullish engulfing bar, that area, under that area to kind of like put our stop in, because there's a lot of buying, obviously, along here. Off the back of Friday, there was a lot of buying, and really the fundamentals from the US just look okay. They're looking good. There's nothing suggesting that we are in any sort of trouble. The big problem with the US, and I get it with the bears from the US side are probably more worried about the debt than anything else. But that is just that's a hangover that will come and bite the US economy at some point. But knowing when that's going to happen, it's so difficult to know when it's going to happen that you may as well go with what's immediate.
What's
and
in
the
front of you,
immediate,
that's
yeah,
right.
the immediate numbers are still robust. So I'm a bear on the Swissy, and the only one that I would contest is the pound Swiss. And the reason I would contest the pound Swiss is because I don't like the pound.
Okay.
I think that when it
Overcooked
comes,
or
no, well, so if we look at the pound on if we look at the pound on the against the dollar, particularly against the dollar, and it probably will outstrip the Swissy, to be fair, because I think the Swissy is probably the weakest. But look at it against the dollar, it looks, by all intents and purposes on this chart, that we are in some sort of trading range here, and we're at the lower end of it. So it wouldn't be wise, in my opinion, to take a short at this particular point. But the fundamentals still from the UK are okay as well, and there's no reason for Bailey to kind of come in and say we're going to be lower interest rates, at this stage. But the seasonal bias is lower going into around about the middle of March. The COT data is still bullish, but running out of a little bit of steam, and it's at that higher end of the bullish area. Where the net buyers are close to their, what tends to be around about their peak. And so when something is around about its peak, the kind of the two things it can do is kind of go into extreme mode, or it's going to reverse. I don't see why this would go into extreme mode. So that leaves me at the point where I think, well, the more likely position then is that it's going to reverse. So COT data points to a possible reversal, not a reversal, but a possible reversal. Seasonal data points to a reversal, and the fundamentals again are pointing to a possible reversal, because some numbers are really quite poor and some numbers are robust. So we haven't really got a reason to sell the pound. And I guess my point is that with the run that we've had to the upside, and this trading range that we're currently in, and the COT data possibly peaking out and seasonals pointing lower, if there is some momentum picking up in fundamental news that suggests actually the economy is getting squeezed, because the interest rate being higher is going to eventually squeeze the economy sufficiently to lower some of those fundamental numbers. If the economy looks sufficiently squeezed, then this thing sells off, and particularly against the dollar that has been very, very strong, that it comes down, and I guess that's where the problem comes. If we're going to sell the pound, what do we sell it against? Well, I wouldn't go against the Swissy. Yes, the dollar, but then you could pick a whole bunch of other currencies against the dollar. And as you quite rightly point out, you could even pick gold. So that doesn't look that attractive. But what about the CAD? Well, the CAD looks good. The CAD is in another pretty robust looking economy. What about the Aussie? Well, the Aussie doesn't look good, but it's also at the other extreme. That thing has been beaten up sufficiently. We got an interest rate decision. Is it tomorrow or tonight? Tomorrow. We got an interest rate decision tomorrow. So that will lift some of the pressure on the Aussie dollar for until the next interest rate decision. I doubt they're going to say anything too hawkish. They may even say something quite dovish. I don't know, but inflation's still quite high in Australia. And we've had a trade balance number today.
It did tick down again last time, though, I think, didn't it?
It's ticking down, and I suppose it's the same as the UK. The UK's inflation numbers are ticking down, but they're not ticking down sufficiently enough to suggest that they're ready to lower interest rates. And I think that's where Australia probably sits as well. It's just not low enough, So it's coming down, but it's not low enough. Eurozone ticking down, but not low enough, but closer, at least closer. So the Eurozone is another bearish kind of looking like quite a bearish region. The Aussie, the difference of the Aussie, in to my view, is that it's had a decent sell-off. So while it's unloved, then the question is, can we start making the case for upside? Probably not yet, but we probably can't make the case for downside yet with the pound. So that means that if the timing can be correct, the pound Aussie is going to start looking a bit more attractive. Now, it may well have a little bit further to run. Maybe that level there, maybe this level here. Back to the highs? I don't think so. I mean, we're going to have to kind of zone right out to see where the primary trend line sits. And we're not too far away, mate, from what I can see. It does depend, where we do end up drawing these trend lines. But let's say we go to the extreme. That would suggest that it does have maybe what would look like threes to 8, so maybe another 400 pips to the upside. Well, at something that's at nearly $2, that's what we're looking at, 2%, maybe another 2% move or something to the upside. Possibly that could happen. But I do think we're in and around, and it's possible that we're here. We're in and around a technical level that this could reverse. But we haven't got the fundamentals to match it. But we have been beaten up on the Aussie, and we have been pretty much, pretty extremely bid up on the pound. And we're kind of heading into potentially a different phase, So when do these start to exchange their position? So this one I'm watching quite closely.
There may be something I can add to that. And it's only I don't know if it's hit the world news yet, but certainly they're talking about it here in Australia at the moment. The Chinese have just sentenced an expat who's now Australian, a suspended death sentence due to I don't know what they call it in China, but it's anti the regime, if I can put it that way. So he's been writing about the non-democratic regime in China, if I can put it that way. So
kind of like treason.
Yeah, and that's how they treat it. That's exactly how they treat it. So he's knocking the system, right? And he was foolish enough to go back to China and visit. And of course, he's been seized and now sentenced or suspended sentence of death. The Australian government is protesting loudly about that. And of course, China, with its deference to not being put down in any way, shape, or form, or embarrassed, are tipped to be probably having a strong reaction to Australia's reaction to that, which may, and I'm getting way ahead of myself here, but this is what happened last time we had this situation. China put embargoes and all sorts of things on our trade. So that may have an effect, and I don't know if that's hit the news yet or not, but watch this space, I suppose, in that regard. That will affect the Aussie.
Yes, it will.
If that's
You're absolutely right. Yes, it will. I mean, you know, we'll watch out for the Aussie, because it's, as I say, it's not ready yet. But I like the fact that it has been, you know, unloved for quite some time, and we've got an interest rate decision, so that tends to release a little bit of pressure on a currency after the interest rate decision. You know, obviously, what investors have priced in is something dovish. I don't know whether that means a cut. I don't know whether that means just a dovish statement. I don't know whether that means a pause. I'm not sure. But they're obviously pricing in something dovish. Now, they could say something more hawkish and it could turn around on the day. Or it could just be that this is where we are going to settle from this interest rate decision, and then we start to see the data from the new interest rate decision. This morning, as I say, trade balances were better than expected, and pushing sort of like back into some relatively positive regions as well. So there's much more to go with this particular data. There's much more data that we need before we can have any confidence in the Aussie, and there's more data that we need before we can say the pound is a sell. But it is the most, I think, one of the more, I should say, in my opinion, interesting currency pairs, and that's pound Aussie short. So I'm looking at that.
I think I came to the same conclusion you did. I looked at all the and Lloyd taught me how to do that, and I think it's very pertinent to look at all the currency indexes. And you know what? The only one that I thought had any substance behind it was the greenback. Everything else looked to be at a resistance level to me, and so I just could not come to the conclusion you have, where I can find a currency. You know, you're looking for a weak currency and a strong currency, right? I found 6 weak currencies and 1 strong currency. So
yes, you're absolutely right, mate. Well, you're absolutely right, and actually, that's exactly what the seasonal data suggests as well. Now, on top of that, the yen is another currency along with the euro. The two of those two right now, and as I say, the Aussie's a bit different because the Aussie's already kind of moved quite a lot. But the Aussie and the euro and the yen look very, very weak. Where that becomes interesting to me is not in a dollar yen position, because the dollar yen, it's probably got enough room actually, dollar yen. When you look at this weekly chart, it's got enough room to go. I also like the CAD yen for some upside, but that is getting very, very close to these all-time highs. But where it becomes, I think, a bit more interesting is when we look at the Nikkei, and we can kind of flip where we are with what we have to look at. Now, the Nikkei also looks pretty overcooked up here, which is not great. But on an intraday kind of basis, I quite like the way this chart pattern is. And it probably will go and maybe have a look at those highs again. So I like the Nikkei for a short-term position to the upside, and particularly with the yen being weak. Now, there's the trend line along there. Don't love that bar, but it's a very good looking bar when it looks when it tried to push through, and then it reversed quite aggressively. So in this area, and where I'd be interested in is the weekly pivot. And the reason I think the weekly pivot is the most interesting is twofold. Firstly, because it's the weekly pivot, of course, but secondly, when we look at this bar on the 4-hour, it kind of leads us back to that area. The high of that bar, it leads us back to this weekly pivot kind of area. So you got the trend line there, you got the weekly pivot, you got the high of this, you know, the most kind of bullish looking bar or reversal bar, most obvious looking reversal bar there. And then what's this trend line doing here? That's pretty conclusive in my opinion. So not that I'd be interested here, but if this could come down and float around somewhere in this area, I think the Nikkei is a buy, and one of the reasons I think it's a buy is because of price action. But this area here, anywhere that's the buy zone in my opinion, and maybe going to see those highs. And if you're going to put stops under this bar, which is a possible answer, then that you probably need to aim for there. If you wait for something a little bit more tighter intraday, like a 5-minute or a 15-minute chart, then it would change where you need to get to, of course, before you're making a 1-to-1 and multiples of that. So this one I think is on the watch list, but I need a little bit of a pullback first.
Do you think the investigator of the indexes who's just joined us might agree with you? G'day, George. I know he's there.
He's there. I just I see him.
I'm trying to find the unmute button.
Hi, George.
How are you gents doing?
Yeah, we're doing well, mate. How are you?
No, I'm well, thanks. Doing well.
Happy belated birthday, buddy, for last Monday.
Yeah, superb. Thanks, mate. It was brilliant.
41 and 7 days. Fantastic.
Nice. Good age.
Good age. Yeah, you're 1 year off. It's 42 and 7 days.
Oh, yeah.
You have a good time, George?
No, it was brilliant. Absolutely.
Oh, great.
And it was then became a long weekend, which then affects your recovery, right?
Yeah, for sure. Hard to get in the hot seat. Well, now you are in the hot seat. What do you think of the yen? What do you think of the Nikkei? Or is that not really one index you like to look at?
It's actually not on my list of things to look at, but I can pop it up pretty quickly.
Glad you can still pop it up, George, after your 42nd birthday. That's excellent.
Carry on in here. Carry on trading in here.
All right, let me put up the Nikkei and then talk about it. JP225, it's written on mine.
Yes.
Okay, I'm just going to share the screen if that's okay.
Grand.
And there's no real reason for not having it, so because these indexes are just charts, as long as you know when the particular exchange is open and you're tracking the news. So I don't have it on for any reason than that. It's just not on. It depends on what I'm looking at. This is the daily. I presume you're talking about the daily, am I right?
I quite like it intraday actually. 4 hour is where I was looking at it, but I would probably enter it on a 15-minute chart probably.
Okay, so that's my 4 hour.
Yeah.
If I was just looking at the 4 hourly, I would have to wait a little bit to try and find a way to get in. I mean, we are coming off this level here. 1, 2, 3 pushes, double bottom, higher low. So if I was looking to get in, I would need to see a reasonable enough signal to jump in. Something like that appearing anywhere within here would be something worthwhile for me to look at. And that level of resistance, probably the first level of resistance to concern myself with, which also corresponds, I think, within the range of just this trading range that we have here. So breaking out above that. So in terms of going long, coming off the double bottom high low, that's what I'd look at. If we start to sell off, then I'd need to be a little bit more patient to see bears giving us a decent enough bear candle, and then any kind of pullback to look to take that trade. if we're still within this range, because we can still get to, you know, a reasonable enough return by the time we get to this low, which is again, you know, I guess the same kind of thinking. If you get a setup here, you can get a decent enough return. What's decent enough? I think I caught the tail end of what you said, 1-to-1 plus, you know, before you get to levels of resistance where there might be pullbacks. If I went down to, I think you mentioned 15 as well. Okay, so things get a little bit more tighter in terms of the levels that I'll be looking at. Coming in, you know, we had a low Asian session, very high. And we are in a bit of a trading range here. So again, what's going to determine the bias? Now, the thing to kind of bear in mind, you know, when you drill down timeframes, depends on what you're looking to do. If the 4 hourly was the time frame that I trade off, when I go down to a lower time frame, I'm just looking for a tighter entry. So I'm not going to worry about any other setup. So so let's say I was looking for, we mentioned going long, and all I'm interested in is a setup down here that I can trade to go long, to get a tighter entry, and then go back and manage on my 4 hourly. But if I'm only trading the 15 minutes, then I'm not worried about what's happening higher time frames. Then that changes the view. You know, I want to see if when I get here, if I get a double bottom and then a higher low, or if the bears are going to break beneath this, pull back and continue to sell off. I'm not doing anything in the middle of the trading range so far. I mean, we're right in the middle of the day's range, so nothing to do there. And I have to wait to see what happens when we get up here to get a double top, back down, double bottom, you know, and we start to go a little bit higher. And I think that's probably going to be the same kind of thing on the 5, you know, because we smack bang in that middle. So wait to see what happens down here or what happens up. That's kind of the way I'd look at it at the moment.
I like it. I like that, mate, because that lower line is very close to the weekly pivot and the trend line that I've drawn as well. So that's exactly what I would I'd want to do too. That'd be my counsel.
Yeah. So having said that, I mean, just looking at the rest of the markets, start off with the indexes. And I'm always keen to see if right from the open we get any trend forming, bull trend, bear trend, breakouts that might give us pullback opportunities, etc. So I didn't see anything on the DAX this morning, nothing yet on the UK 100. So, you know, just going across NASDAQ, Dow Jones, S&P, okay, we've got Nikkei, and I had Swiss 20 there. So there's nothing that's distinct for me to jump in at the moment. So I've got to wait to see who is going to try and take over the market. You know, we've got a minute to go in this candle. If we get strong bear candles closing near the lows, are we going to get follow through? You know, if you get follow through, that's fantastic. I mean, DAX, if I get a follow through, then, you know, we trade trading beneath the the 10 EMA, which is fantastic. I want to see if we get a breakout that we can start to trade for pullbacks. And that's literally across, but I mean, are we going to get it? That's a question. So we'll have a look at it. What was interesting for me so far, while we wait for anything on the indexes, was to see gold break beneath the low of Friday. So I thought that's quite interesting. So it kind of puts me in a bearish mode on this commodity. However, before I jump in short, you know, I need to see a decent enough pullback. Already, when I get an acceleration, sell-off like this, 4, 5, 6 candles before the pullback, I get a little bit more cautious. I mean, if I had 1, 2, 3 strong candles, the pullback becomes more reliable. But when we get, you know, weakish sell-off, I need a little bit of a stronger pattern to continue to sell. So a bit bearish on gold, but I need a little bit more to see what we get. So it's still probably wait and see. So we spoke about this just now. That's good enough as the first close beneath the EMA, but we need follow through. If we get follow through, bears might be trying to create.
Well, it's a
Take
massive
control
cup
of
and
the
handles, isn't it?
Yeah. So we're gonna wait and see what happens with that candle, whether we get follow through. If we do, that's good, because then we're starting to come off some failed breakouts, double tops. UK 100. I mean, it's good for the bears, but until we close beneath the EMA, for me, the 10 EMA, is still saying wait a little bit, because although we had the bulls breaking out, weak follow through, I mean, it's still the bulls that have an early opportunity to accelerate up. For the bears, the moment we close beneath the EMA, then I start saying, okay, we might get bearish price action. And that probably
While you're on that chart, George, sorry if you don't mind. Ash, I think the three of us here might have an opinion on the FTSE. If you can go to, I think it's the daily chart, might be the weekly, and I know you don't live in that space, but
daily or weekly?
No, it's well, the daily does show it to me anyway. There's a range there that we've just come off the top of, and perhaps we've got a lower high on it, but it is the weekly that I think I'm looking at.
Okay.
Fair bit wider, if you don't mind. Yeah, I think that probably shows it. That horizontal level running through there, Ash and George, that we've come back underneath and retested. Is that interesting to you guys at all? I
The
see
yellow
that
one?
as no. The grey one. That we've just come underneath and retested.
Where we are now.
Yeah, that level.
There.
Yep.
Ah,
That looks suspiciously like we come off the top of that range underneath that resistance area and just retested it. To me, that looks very, very sellish. Any thoughts?
yeah, I think that's interesting, mate. You know, the FTSE, it's definitely kind of reacting to sort of levels, but it's caged. That's the thing with the FTSE is, this isn't, look at it for years, really. It hasn't gone anywhere. It's right in the middle. It's really right in the middle of a wider trading range dating back to the start of 2023, it looks like. So we've really had a year where we haven't really gone anywhere with the FTSE 100. And you're right, that looks like around about the midpoint. But I wonder whether I wouldn't put too much sway in it because we've been in such a range. To me, it could go above it and then head to the top of the range. While we're underneath it, yes, it looks maybe a little bit more bearish, but we're only just underneath it, and we're not really accelerating away from that particular point. So I'd kind of want to see more, I think, with the FTSE before I chose a direction. Right now, it looks like it's pretty it's undecided, and this area is the place to defend or attack.
Okay, I'm a bear, George.
Yeah, so where's my, so if you take, I've just taken this little tool up there, forget about what's happening down here. If you kind of look at the low and the high, again, I think that's what Ash is saying, smack bang,
in the middle, yep.
In the middle of that. So, I mean, if anything set up within here that you thought, well, I can, I get a decent enough low test candle, I'm going to take a punt on this. Question is, where do you put your stop? Because you are in the middle of the trading range. For me, if I was to take a trade here and it's set up to go long, stop has to be at least down here, that low that we've got. And if we got a double top or whatever kind of setup that we have may have in here, I may have it be putting a stop somewhere within here, because then I'm hoping that we get up here, get a decent enough reward, even if we bounce off it, or if you get all of this could just be another lower high double top. So if you were to sell that, you're hoping to go all the way down here. Now, why would you want to put a stop that far? I would think because, I'm taking full risk on the weekly. So that's if I'm trading that. So you take a full risk, might as well put your stop down here. If you want to put a tighter stop, then might as well just reduce the risk as well. There's no point if 1% is my trading level and I get a decent enough signal here to put 1% right beneath the can, rather go 0.5%, because it might come, take it off and accelerate up. So this and it's really trying to take a trade in the middle of a trading range, which I don't prefer that actually.
Yeah, no, I get
rather,
it. But you know what I'm
Yeah.
like? If I see a pattern, I can't get out of it. It just won't go out of my brain until it either plays out or it's wrong. And
Yeah.
really what I see there is a continuum of false breaks of that exact level. And if you
Yeah.
go to the last two false breaks of that level, which is where you've got your trend line, right? Those
Yeah.
two tests of that trend line, they've both driven it back to the bottom of that range. So that's exactly what I'm expecting to happen again.
Yeah. So when
That's
we
just
get
me.
up here, yeah.
No, I don't even
Yeah.
expect we will, because we've now got a lower high form. Well, sorry, we haven't, because the candle hasn't closed. But when that candle closes, if that candle closes below the high of the previous week, then I think there's a trade on to the short side. No, sorry, the last week. If it doesn't take out that high, I think that becomes a lower high, and I think we're going down to the bottom of that range again.
Yeah, down here somewhere.
Yeah.
Yeah. So I mean,
The
we
other
sold
thing
off.
I would certainly
Yeah.
add with the FTSE is that it has been a really tricky beast to tame and pick direction, because as you say, mate, you look at it and think, okay, well that the evidence there suggests some downside, but then also the previous trough looks like a higher low, and the previous peak actually looks like a slightly higher high as well. So it's just, to me, the FTSE is just a mess. It's not because it's trapped in this kind of area. It may well sell off, but how deep does it go? It's just, and it may well buy up, but how high does it go? It just doesn't know what it's doing. You compare that to some other markets in the United States, and they've got direction.
There is easy to trade, and that's what you're saying.
Yeah, they've chosen their path, and they're on their way. But the FTSE just hasn't got a clue.
There you go.
Yeah. Well, if you trade in a daily, I guess you get a little bit more opportunities on the daily.
Mm.
No, all good.
Yeah, I think when you go in a bit,
your opinion, you guys, because my opinion's very, very clear until such times as I'm proven wrong. And to me, you also got three amigos there, the ones that you pointed out, George. Those
Yes.
three highs.
Yeah.
So anyway, all good. Thank you.
Yeah, so all good. I mean, nothing. I'm just having a quick scan since we started speaking. Nothing is kind of showing very strong bias in any direction for me to look at. So just have to wait and see whether we'll get something midday and take it from there. Until then, we have coffee. We keep watching.
Coffee. It's Monday, so I haven't got a wine, but probably find something downstairs to have. Kathy Lien, mate. Have you know much about Kathy Lien?
No. Tell me.
Okay, she's a bit of a rock star trader and has been for many, many years. But the reason I ask is you'll be meeting her in Bali, of course. And rock star traders don't generally come along too often to say good day to us. So it's pretty cool. I first saw her about 15 years ago in Sydney. and she's quite impressive and lovely lady. So looking forward to that. And the reason I'm saying it is bringing up the point that anybody who's listening here can come to Bali still, I believe. I still think there's availability on that. You'd have to contact James at Actions or contact at Actions to Wealth to find out. But not only you or we three in the room, and I think there's 20 traders. Is that right? 20 traders, Ash?
Oh, mate, yeah. I thought everybody who wants to go is going to go. You can't miss Bali. I mean, you know, if you've got an opportunity, you got the time, you got the money to spend. You've got to go to Bali. It's just it's brilliant.
Yeah, it's
Absolutely brilliant.
else, isn't it? It really
Yeah.
is.
How do you
So-
spell KATN? I want to Google it.
Kathy,
KATHY.
or it might be C.
No,
I
it's
can't
K.
remember. It's K, yeah.
Yeah.
Lien.
LIEN. Oh, I got it
Yes.
wrong. LIEN. Kathy
You'll
Leon.
bob up
Oh,
everywhere, mate. She's been around for a long, long time and very, very well respected technician.
okay. So I put it the wrong name. All right, cool. Thanks, gents. We'll
Yeah,
catch
welcome,
up.
mate.
Too easy. Anybody got
Uh,
any questions for us before we rock and roll? Because I think we've chewed up enough of your time. If you've got any questions for us or would like to share something with us, that would be awesome. Because I've got some funny ideas that you may be thinking something we're not.
Yeah.
And I'd like to know. I'd like some more ideas going into the week. It's good.
Yeah, well, it's do you know what? I think it's a tricky week in some respects because the direction I need hasn't unfolded yet. You know, in many ways, fundamentally, and on the price action. So until that happens, I can't really do a whole bunch. You know, I won't be just sort of reacting off. I like the Nikkei, the weekly pivot, but aside from that, I mean, it's heading there right now as well. But aside from that, I'm not really sort of too keen to call anything just yet. You know, I need the week just to develop a little bit more. This Monday particularly, looks quiet at this stage.
Yeah, I have to grit my teeth when I say it, but I'm pretty much a dollar bull for the
Yeah,
Nikkei.
me too, mate. Yeah, me too. I'm with you.
And that makes trading pretty easy if it'll set up for you because you've
Yeah.
got a whole bunch of things to trade against it, right?
Yeah, yeah.
But I trade setups, so I've got to wait for those to occur. And if I get pullbacks, then I'll be in good shape, I would think, to have a decent old week.
Yeah.
No
Yeah.
questions.
Sounding good. No questions.
Nobody wants to contribute anything, and that's not fair. What I mean to say is nobody's got anything to share with us at the moment. It's not compulsory to contribute. Of course, you can listen to us wax on Lyrical forever and ever if you want, and it's fantastic to have you here. But if you've got anything that you want answered or want to share with us at any stage, that's why we're here. But seeing there's not, I think we can dismiss. Oh, hang on, look out. Can we have a session on how to better understand the COT, please? There you go, Ash. From Paul.
Yeah, sure. Yeah, we absolutely can. So maybe next Monday, remind me, and I will go through a little bit to do with the COT data. You don't need to download it from the CFTC. We'll have a look at it directly from investing.com because they build the charts for you, so we can have a look at that.
There you go. That's going to be a good tip as well, Paul. That's where you can get it from. So, all right, that's on the drawing board for next Monday. After we've given our opinion on what the market might present for the week, we'll go and dive into some COTs if we can fit. God, dad jokes. They're no good, are they? It's time to get out of here. As they go over everyone who's less than 67 years old. They go over your heads, and I get that. All right, everyone. Thanks, Ash. Thanks, George, for being my trading buddies. And thank you all for being our trading buddies. We look forward to catching up with you next Monday when we'll do it all again. Have a great week, everyone.